It's a quiet morning, coffee on the counter, the house is still. Then you open the mail, a thick envelope. Official, cold, not a holiday card, not a rebate, a bill for money you did not receive. You didn't sell your home, you didn't cash out. You didn't take a profit, but they want their cut anyway. They call it an unrealized gains tax, a tax on what you might have, a tax on paper, a tax on a number somebody else decided your home is worth, a number you can't spend, a number you can't eat, a number you can't use to pay the electric bill unless you borrow against your house. And that's the trick. They're pitching it like it's only for the rich, only for billionaires, only for someone else. That's how every trap begins. Because once they make it normal to tax gains you never realized, they can tax anything you own, anytime, for any reason. Your house, your land, your retirement account, your small business, your family's future, and you already know how this ends. Not with a SWAT team, not with sirens, with paperwork, deadlines, late fees, liens. They don't have to take your home by force. They just raise the bill until you can't pay it. And then you hand them the keys yourself, quietly, legally, by the rules. That is how the system eats the middle class, one envelope at a time. Now zoom out. This isn't random, it's a pattern, old as history. Empires don't collapse in one dramatic explosion. They collapse like a rotting floorboard. First, they borrow, then they print, then they promise. Then they panic. And finally, they confiscate, without calling it confiscation. They don't say, we're taking your wealth. They say, we're improving fairness. They say, we're modernizing. They say, it's only temporary. Temporary, right. Here's the part most people miss. An unrealized gains tax is not really about billionaires. It's about precedent. It's about permission. It's the government testing a new idea in your mind. You owe us for value you never touched. Once that idea is accepted, the only question is how wide they swing the net. Today it's the top. Tomorrow it's the comfortable. Then it's the lucky. Then it's the non-compliant. And the sleeping herd will clap each time because they'll be told, it's not you, until it is. Let's talk about the mechanism, because this is where people get hypnotized. They hear unrealized gains and think it's complicated Wall Street wizardry. It isn't. It's simple. It's the idea that your assets can be valued every year, and the government can charge you based on the change, even if you didn't sell, even if you didn't get a dime. That concept has been floated at the federal level as a minimum tax on the ultra-wealthy, often described as a 25% minimum tax tied to total income, including unrealized gains, aimed at households above a $100 million net worth threshold. Now hear this. The danger isn't whether you personally have 100 million. The danger is that the logic is now on the table. And once the logic is on the table moves, because only the rich is always the front door. The back door is inflation. Inflation quietly drags ordinary people into wealth categories they never imagined. A house that cost $110,000 decades ago can be worth $600,000 today. Same house, same roof, same kitchen, different paper number. And governments love paper numbers. Paper numbers are easy to hunt. They can be printed on a bill. They can be collected with penalties. They can be enforced with liens. And here's the brutal part. Homeowners already live under a version of this, property taxes. You pay based on assessed value, not what you sold for, not what you actually got. Assessed value, an official estimate. So the machine already exists, the assessors, the databases, the billing departments, the penalty schedule, the foreclosure process. All they need is a new label, a new layer, a new surcharge, a new excuse. And when governments get desperate, excuses multiply like mold. Now let's make this personal. Picture a couple, both 67, retired, fixed income, no fancy lifestyle, no yacht, just a paid-off home they worked for. They bought it for $160,000. They paid the mortgage for decades. They thought, at least we'll always have the house. Now the market says it's worth $520,000. On paper, that's a $360,000 gain. But that gain isn't sitting in their bank account. It's trapped in drywall. Now imagine a new rule, local, federal, or some hybrid, says we're going to tax a small slice of that gain. Now, they won't call it punishment. They'll call it fairness. They'll call it closing loopholes. They'll call it shared responsibility. And then the bill arrives. Even a small percentage becomes a punch in the gut, because this is how it works on a fixed income. Your income stays flat. Your costs rise. Your margin disappears. First, it's uncomfortable. Then it's impossible. And when it becomes impossible, the system offers you help. A payment plan, a deferral, a special program for seniors. Sounds kind, feels kind, but it has a hook, a lien. A lien is the steel hook in the jaw. Because once there's a lien, You don't fully own the home anymore. You live there. But the state has a claim. And if you miss the next payment, the hook tightens. Now they start whispering the most poisonous sentence in America. Just borrow against your equity. There it is. Turn your home into an ATM. Turn your safety into monthly payments. Turn your freedom into debt. It's like telling a sailor to burn the lifeboat for warmth. It works for one night, then you freeze. Now stack the pressures, because it never comes alone. Insurance up, utilities up, groceries up, medical bills up. Then the tax bill rises again and again. This is how people get pushed out of homes they already own. Not because they were reckless, because the rules changed around them. We've already watched this happen in real time in places where valuations surged. In Georgia, for example, assessed property values rose about 61% from 2018 to 2023, while property tax collections rose about 44%. That is what they called it, a backdoor tax increase. That's local government. Now imagine Washington's mindset layered on top of local machinery. Now imagine the same logic aimed at your retirement. Because this isn't just about homes. An unrealized gains tax is the government saying, we're running out of places to look. They already tax your paycheck. They already tax your purchases. They already tax your property. They already tax your inheritance in some cases. They already tax your dividends. So what's left? Your balance, your net worth, your paper value. This isn't a theory, this is math. When spending exceeds revenue, they borrow. When borrowing explodes, the interest bill explodes. When the interest bill explodes, they face 4 choices. Cut spending, raise taxes, inflate, or default. Politicians hate cutting. Default is politically radioactive, so they reach for the quiet weapons. Inflation first, then innovative taxes. Taxes that don't sound like taxes. Taxes that sound like justice. Now step into the future, because the future is where the trap closes. Imagine this. Your neighborhood looks the same, but it feels different. More for sale signs, more moving trucks, more older couples packing up memories, not because they want to, because they have to. A friend down the street sells the home they raised their children in, not for a dream, for a deadline. They tried to keep up, they stopped traveling, they cut back on gifts, they delayed repairs, then they missed one payment. First comes the late fee, then the warning letter, then the lien notice, and once the lien shows up, the stress never leaves. And imagine this. You call your son or your daughter. You don't want to, but you need help covering the bill. You can hear the strain on their voice because they're squeezed too. Their mortgage is higher than yours ever was. Their groceries cost more than they should. Their kids' expenses never stop. Now your safe house is pulling money out of the family like a vacuum. That's how generational wealth dies. Not with a crash, with a slow bleed. Imagine this. You decide to sell and move somewhere cheaper. But thousands of people are doing the same thing, so offers come in low and moving costs are high. And rent is worse than you expected. And governments don't accept the market went down as an excuse. They still want their revenue, so they squeeze harder elsewhere. You sell, you pay fees, you pay taxes, you pay repairs, you pay movers. And you realize the truth. You didn't escape. You were extracted. Now add the next layer. Control. A tax on paper gains works best when money is trackable, when transactions are watched, when accounts can be flagged, when compliance can be automated. That's why the future is always sold with one word: convenience. They say, it's safer. They say, it's faster. They say, it stops crime. But what it really stops is escape, because the more digital the system becomes, the easier it is to enforce rules instantly, programmatically. And that should chill you, because programmed money isn't money. It's permission. Permission that can be changed. Permission that can be limited. Permission that can be revoked. Imagine this. You go to buy gas, your card declines. Not because you're broke, because your account is restricted pending review. You call, you wait. A recording tells you to visit a portal. The portal demands documents, forms, proof, and more waiting. Meanwhile, the deadline hits, the fees start, the lien process begins. You aren't arguing with a person, you're arguing with a machine. And machines don't care that you're 68. They don't care you paid taxes for 45 years. They enforce policy. Now let's pull history into the room, because history is the mirror they don't want you to look into. When governments get desperate, they redefine words. They redefine temporary. They redefine emergency. They redefine public good. And sometimes they redefine ownership itself. In 1933, the U.S. government issued Executive Order 6102, requiring people to deliver most gold coin, gold bullion, and gold certificates in exchange for paper currency, under threat of serious penalties. Different era, same instinct: control the money, control the people, and in modern times, the legal arguments around realization are being tested. In 2024, The U.S. Supreme Court upheld the mandatory repatriation tax in Moore versus United States, an important signal in the broader debate about how Congress can tax income connected to gains you may not have received as cash in the usual sense. A signal, a warning light. So here's the question that matters. Do you trust a debt-drenched system to respect your property when the math turns ugly? Because the math is ugly, and the system is telling you out loud that it is willing to tax paper value. So what do? You don't panic. You don't chase hype. You don't gamble your retirement on promises from the same people changing the rules. You position. You build lifeboats. Because you cannot stop the ocean, but you can decide whether you drown in it. This is where physical gold and silver enter the story, not as a get-rich scheme, as survival, as freedom, as bearer assets. Bearer. Meaning, if you hold it, you own it. No counterparty, no promise, no middleman, no portal, no permission. And that single fact changes everything. Because most people's wealth today is a promise. A bank promise, a brokerage promise, a pension promise, a government promise. Promises are cheap, especially in a crisis. Physical metal is not a promise. It is an object, a real thing in your possession. It doesn't need an app. It doesn't need an account. It doesn't need a password. It just sits there, quiet, honest. And in a world where paper wealth can be taxed, frozen, and redefined, honesty becomes rare, and rare becomes valuable. This is what people mean when they say, be your own central bank. Not because you want to play banker, because you don't want to be prey. Now let's name the invisible killer, counterparty risk. If your retirement is in a brokerage, you have counterparty risk. If your cash is in a bank, you have counterparty risk. If your pension depends on a fund, you have counterparty risk. If your wealth is digits on a screen, you have counterparty risk. All of it depends on someone else staying solvent, staying honest, staying open, staying functional. And history says those assumptions break right when you need them most. Gold and silver are financial lifeboats. They don't stop the storm. They help you survive it. Silver, especially, is the working person's metal. Divisible, practical, recognized, a way to store value outside the system. Now imagine this. 2 retirees, same age, same town, same year. One trusts the system completely, leaves everything in accounts, believes the headlines, believes the promises, believes it won't affect me. The other quietly converts a portion of savings into physical metal, keeps it simple, keeps it private, keeps it real. Then the next crisis hits. Maybe it's a market crash, maybe it's a banking event, maybe it's a new tax, maybe it's temporary restrictions. The first retiree watches the screen, watches the account, watches the rules change, and realizes none of it is in his hands. The second retiree doesn't become a millionaire. He doesn't win big. He stays calm because he has something real and something outside the rule book that keeps getting rewritten. That calm is the return. Now listen closely. This is not about living in fear. It's about living awake. The unrealized gains idea is a spotlight. It reveals the mindset of the people running the machine. They don't see citizens. They see pools of value. They see your home equity as a reservoir. They see your savings as a pot. They see your obedience as a resource. And the sleeping herd will shrug until a letter arrives in their mailbox. So here's the move. You get ahead of it. You educate yourself. You reduce counterparty exposure. You hold real assets. You stop assuming the system will protect you, because the system is protecting itself. And if you want to survive what's coming, you subscribe to Economy Meets History. Not for entertainment, for preparation. Because this channel is for the awakened few, the people who read the fine print, the people who see the pattern, the people who build lifeboats before the deck tilts. And here's the lingering thought I want to leave in your mind. A government that can tax gains you never realized is a government announcing that nothing you own is truly yours until you take steps to make it untouchable. The envelope is coming. The only question is whether you'll be ready when it arrives.